What's up, guys? Just gonna wait 2 seconds. Get started. All right. Okay. Let's have a look at what's going on here. So the favorable plays we're technically going to be longs now because we're leaving from supply levels over here. You're able to kind of interpret data a little bit differently, just more so from like an order flow perspective. So supply 15 supply. So first thing I noticed, so 7 o'clock, yeah, right around here. So I wasn't interested in taking long. I was looking for longs, basically down in here if we were going to come and dive a little bit deeper into this PA. And we just didn't get it, and it was totally cool. It is what it is. I was just kind of waiting for a little bit more confirmations as we started developing further. I was going, okay, well, I mean, need to sort out kind of like what the next move in the market is going to be. So when I saw us tap into this region right here, I saw that we came from a small take on liquidity. We basically liquidated all these highs, pushed in. We didn't really get an order flow shift here. Once we kind of got like a minor structure break, which was right at this level right here, I considered this now the potential for a trend reversal. It's obviously stage one. Swing structure is here, but this is like our internal structure break, which is usually enough to get me involved with that next sort of play downwards. So yeah, this is kind of like the first level in which we would look to get in. Obviously, if we were trading this pro structure from a swing standpoint, here's your low, here's your high. We would have wanted to see this break and then come back up and then start to head in this direction. But yeah, it's just how you sort of maneuver around in structure. You can basically utilize this with swing, internal, all kinds of different things in order to get you into a pro trend state. So like I said, for this morning, what I ended up doing is I saw the 15-minute order flow shift sort of happen in here. So we got the sweep, no closure above, right? A 15-minute sweep. And then we got the chalk, right? Oops. 15-minute change of character. Okay, order flow shift or order flow realignment. We had, sort of liquidity to take into the POI across like this. Okay, then we have liquidity to target across equal lows. 15-minute liquidity. And then liquidity to target on the built up mitigations. Now, how I would play this is on that 15-minute order flow shift, you can see that we have with the low, we've come into another level of demand. The idea is that this will get ran as liquidity if and only if the lower time frame confirmations present themselves to show that order flow is aligning to basically take out the weak lows. So that was how the whole trade idea sort of got formulated. So what I'll do is just map out, essentially I had this POI, get down onto your 1 minute. I didn't use a refined POI. I saw this whole level. So I just kind of refined this down to the last area that took liquidity, which was basically like this. So I've got the initial tap in, we swept that area, we pushed down, mitigated, and then it was super simple. I just waited to, 1 minute realignment because I used my higher time frame. We didn't really mitigate anything that specific other than this entire push, and I just wasn't quick enough on the seconds to get up here, which kind of worked to my advantage. So there was actually I took a small loss as well. So I'm just going to kind of show that. So once we sort of printed in these levels like this, this is where essentially you could have started looking at, okay, like we have a level of liquidity to take from the market, which is resting just above these highs, right? If you look at the 1 minute, like there was no ifs, ands, or buts, right? Like in order for us to come back and run these lows, we need to take liquidity from somewhere, right? So in this case, we've taken it from the highs, right? So when you see these equals like this, you can look for lower time frame confirmations, but the bottom line is like we want to be able to see some form of liquidation to be able to confirm that we can move in this direction. Liquidity to take, liquidity to target, let this align, and then swing. Cool. I was pretty conservative with my targets today. I have a higher time frame target that I was kind of hoping to kind of play into, and I just said, you know what, it's Monday, I'm just going to take my profits off the table, and I'm just going to show you how I essentially took those. So yeah, so we get the tap in, right? We get the change of character, sweep, chalk, right? What caused the change of character? Well, we would argue that it was probably the flip. What do you notice about the flip? Anybody? Yeah, nothing to target, and it doesn't really take liquidity, right? Like, I mean, depending on what time frame you're using, yeah, there's equal highs as well. You know, you can monitor these areas, but the bottom line is like we didn't have anything to take, so we had to take it from the flip, even though this causes it, right? Sometimes you'll get the confirmations to push this down, but it's so much easier to travel into equal lows if we take out a level of liquidity first, right? So, and I think that's pretty well instilled in everybody's head now, is that like, if we don't have liquidity to take in the market, then chances are you'll be the one that gets taken. So you can see, let's go over to our lower time frame. Now, there was a potential for a loss in here. I actually took it. I think some the other guys took it as well. But yeah, we had sort of like this refined level over here. Oops. Call this the level. Go. Bring that across. And this one. Yeah, if you took a loss here, all it means is you followed the plan. So I don't think there's any shame in that. One of the things that got mentioned by a member kind of reached out to me individually, just said, you know, what happens when you take a loss and you know, you just kind of lack the mental stamina to be able to re-enter. And the bottom line is like, the only way that you're going to know whether or not your plan works for you and that you have a good understanding of it is to trade all available setups that happen. Okay, so I'm just going to pull up my. Now, I made a mistake too this morning. I'm just going to show you, like, this is Monday. This is like, you know, it does not get any more textbook for the Monday sort of like getting anxious and getting ready to jump in the market. You can see everything sort of framing up for you. And yeah, you just get in a little bit too early, and that's oftentimes the way it goes. So let me just basically tell you what it is that I'm looking at here. So if you look, like, obviously we can assume we're pro trend, pro order flow. We've got the 1 minute realignment. So then we can confirm with the seconds, right? So 2 seconds here. Okay, we've got the 1 minute chalk and flip. We take liquidity from the flip. So the initial position that everybody probably took an L on, put your, give me a 1 in the comments if you took an L right here. Cool. So can we agree that you took a loss on a winning trading idea here? So does anybody feel sorry for themselves by taking this loss? You shouldn't. You traded the fucking plan. You traded it flawlessly. You know, kudos to you. This is a great, great, great trade to be taking. The one detail that I didn't necessarily like is, again, in hindsight, of course, this is the way that we often operate. We didn't have a whole lot to target, right? Like, yes, we got equal lows down here, but you can see that we didn't have built up mitigations like we do here. So when you get into this position, a lot of people see this as liquidity to take. Liquidity to take for me would have meant at the time that this would have had to break down into here, similar to how this breaks up, goes down, gives us a level of liquidity to take into our extreme, right? Whereas this just has equal highs that don't actually do anything, right? So those are obviously going to get ran, but we need a level to essentially induce is the more ideal circumstance. Nonetheless, I mean, there's still liquidity to take. It's just not necessarily in the form that we typically would like to see it. Something along the lines of like this, you know what I mean? Like this is a good level of inducement to be able to come back up in. You guys kind of get the idea. So if you took a trade here, don't stress about it. This is a good trade to take. So I took a -1 here. And then what I did is I said, okay, well, if I go over to what it says in my trade plan, what does it say? Is there a 5-second sweep within or into the refined area? So we get one into, right? Now we get the next one that gets tapped directly into it. Okay, so we've swept in and then we've swept the actual POY itself. Okay, so we got the two options that are done here. What do we get when we deliver out of this? V-shape recovery, right? Cool. So V-shape recovery, right? Basically showing, and like you have to understand, like it's one thing to say V-shape recovery. It's another thing to say order flow shift. The thing that needs to be noticed here is that we had a level of liquidity to take, right? We had a level of liquidity to target, correct? So when you see this, once we liquidate the highs, there's nothing left. There's no orders that rest above this. So when we come down and order flow realigns with that change of character, right? This is technically leaving from a demand zone, is it not? So if we're leaving from a demand zone, the idea is that, yeah, you can throw a limit on here, but we want to see some form of a, finish my sentence. There we go. So once we have a level of liquidity to take, basically, you guys know how I map my POYs now. I like to take the last really big up move. I don't really care about this little internal stuff. I'm more concerned about what takes liquidity. So if we have this supply region like this, okay, what do we have right here? We have supply, right? We have interaction with demand, right? We break through demand, barely, but you can see that we've broken through it. And what causes the break? Well, it's the extreme, right? So in this case right here, basically putting your limit somewhere in here, if you want to cover the high, which is what I did. I think I had like a 1.5 pip stop. And I believe I just gotten in right around this level like this. And yeah, just ran this off to my weak areas. So if order flow, okay, we come up, we essentially mitigate the 15-minute POI or the 10-minute POI, whatever it is. Okay, we come up, we sweep, order flow realigns, we have the V-shaped recovery or the order flow shift with a level of liquidity to take and now producing a level of liquidity to target. If we look at this, okay, and we've come up into our extreme refinement that takes liquidity up on the top side, okay? If you were to look at this right now, and price is sitting here right now, you've gotten into the trade, you've moved over to break even, whatever the case is, where's your target? Yeah. This is not demand, right? So you have to remember, and you have to think about this logically, right? This cannot be demand if order flow has shifted off of an already order flow shifted on the higher time frame, right? So if order flow has realigned on the 15, we've come up and we've proven this with this order flow shift, the area that is now weak is going to be here. Everybody understand that? So we only knew that this is a weak low when order flow realigned for us at an extreme POI. Otherwise, we can assume that technically, like obviously we're not looking to trade long this high up in price, but there's going to be people that are going to be trading this long until we see an order flow realignment, and then we can basically target the liquidity that rests below the lows. Okay, so that's basically it. Now, what I ended up doing is going, I believe, the next level sort of beyond, which was, I think I ended up targeting this, if I'm not mistaken. Yeah. Cool. Now, what I'll do is I'm just going to show you guys. I actually ended up taking 2 positions in here because I took a loss and I'm a big baby and I just wanted to get involved with another trade. So what I ended up doing is I entered on the upswing into this. Oops. And then I also entered a sell stop right underneath this low, just to show you 2 different types of entries here. So when we come up into, let me just go like this and label this sell stop. Did you partial at the week M15 low? Yeah, I took like 80% off there. 80% on. Actually, I took 100% off of this position, this sell stop. 80% off on the other one, and yeah, the rest is running right now. I don't know how it's going to do, but yeah, like I said, it's Monday. Not looking to watch this draw back down. So remember, I said this a few weeks back. You have to remember how the market sort of operates. If you're a seller, chances are there's somebody looking to buy on that opposite side, and you need to understand, okay, well, where would a sensible place to start looking for longs be? And let me just kind of go back out to this for a second and talk about it, because when you look at this, okay, and if we have a structural high here and a structural low here, we have an interaction between supply and demand right here. This is below liquidity. This is the reasonable area to target. See how easy that is? Are we going to get some sort of feedback in these areas? Potentially. But really, we can only assume that the market is really, like, if we were going to trade this long right now, we would have 2 options. We would have the extreme, and we would have this interaction zone right here. Structure, structure. Agreed? So when you're targeting, we're still expecting this to probably drop through to something down here, in all fairness. However, you don't need to trade that aggressively, especially with a funded account. You don't want to be watching this thing go and draw down and all that kind of stuff. You want to be able to just kind of take your profits, move on, wait for the next setup the next day. You've got more than enough money to trade with. Personal account, on the other hand, like taking 50% of your profits off here, letting yourself pull back, looking for a scale in, and targeting all the way down here is also reasonable, in my opinion. So, boom. Yeah, so I viewed this as technically, so because we're trading alongside the higher time frame, we liquidated, I'm able to actually trade this and view this as a potential for a first area of a pro trend move. We're trading against the 15-minute swing, but the internal structure has lined up. So this is technically, again, just the way that I view it in terms of trend, low, high, low, high, low, high. Low gets taken, high gets respected. I'm expecting that this low will probably get ran as liquidity to be able to come down into the more extreme. So personally, I view this as pro trend, pro order flow using internal structure as opposed to swing structure. Hopefully that makes sense. So yeah, like you can, and like that's kind of the beauty of like the way that this model is sort of created, is that like you can utilize it in the way that makes sense for you, and you need to do it in a way that, okay, ultimately we don't know that this low is going to be weak just yet. We have suspicions that it should be. However, trading into these levels, yes, you're technically counter trend against swing structure, but you're pro trend in relation to internal structures. So you just need to have, sensible targets where we should technically be looking for longs from. Now, if we delivered very correctively into this region, pushed up, liquidity to take, liquidity to target, we can now trade this exact same thing, pro trend from the extreme refinement, alongside 15-minute structure. I would obviously want to see some form of a realignment on the 15-minute before we could actually do that, just given the fact that we have broken internal structural several times. We've had a bunch of failed demand levels. So we would want to see some form of realignment to just kind of solidify the bias. Yeah, that was basically my trade day today. Like I said, I just nice conservative targets. This is the level in which I was expecting to see some form of pullback from. And you can see, like, I mean, it's almost textbook, right? Like, this is an unmitigated area. So it's, you know, without question going to prove to have some sort of reaction. As soon as it starts having a reaction, are you looking to trade it right away? No, not necessarily, because ultimately, if you look at this right now, we are counter order flow on the longs, pro structure on swing structure for the longs. If you were to look at this, technically, like, you could look for a 1 minute if you wanted to, but the bottom line is, like, in order for us to take something substantial into these potential equal highs, we're going to need to see something realign on that higher time frame. In this case, I would like to see the 15-minute, right? So if you want to see a 15-minute realignment, you need this to break, right? So chances are that's not going to happen. So what we're going to do is likely come up to mitigate here, to then push back down, likely liquidate this area. Same thing, creating structure. And then as we create this liquidity, if we have liquidity to target, where can we take liquidity from to be able to target that area? Someone draw it. Yeah, exactly. So if we do this and then we sweep down into our extreme demand down here, doesn't that make it a lot easier that if we have all of these orders, you know, that were sell side liquidity now filled with higher time frame buy orders or bigger position buy orders, what happens? Well, now this becomes targeted, right? So as things develop, you have to be able to adapt to your conditions. Every single day is going to be a little bit different. And this is why, like, a lot of times in the narrative, we can look at one specific thing. And like today, I was looking for longs at the beginning of the session. However, once I realized that we tapped in, had a V-shaped recovery, and I saw this order flow shift, I said, okay, well, what are we reacting to? We're reacting to something half decently relevant. It's above all this liquidity. We've tapped into it. We've had aggression. We've pushed back up and realigned on our lower time frame. So I just confirm it with the 5 second after the 1 minute realigns. And if all the stars align for us, we are technically pro structure, trading this into arguably something that's going to be weak, coming down into this more extreme area. However, we're not looking to hold it through the turbulence. We want to target the next liquid region, and just beyond liquidity, we want to find the demand that's going to essentially give us the reaction. Go ahead, John.
So when you say, let's see here. Oops, damn it. I was trying to get the chat out of the way. Okay. So anyway, you just, with regards to this aggression right here. So I don't know if anybody else made this judgment call like I did, but I try not to count wick breaks, you know, wicks as a, you know, as a order flow shift. But if it had done something like, I was thinking of other times when I haven't counted a wick break, and it would be something like this, and then we get a wick break, and then it comes back up and does this thing. Like, this is not aggression, right? Like, all this is not aggression in that instance. Not like what actually printed today, which was actual, just like straight down, no structure, makes a break.
I mean, yeah, and it all it requires. So if we were to come down a little bit more correctively, something like this, like that's kind of what you're saying, right?
Yeah.
All I would be
like, or created some structure points inside there before wicking, and then you know,
yeah. I like, bottom line is we're looking for confirmations, right? Like we still get that. Technically, it like, depending on the time frame that you're using, obviously it might show a little bit more corrective on the 15, but if you go up to a 30, it might show more of like a V shape, right? Just depending on what you need to understand is that this is part one of a many step series, right? And like getting to that structure point and actually breaking it, which we've done here, that's the first box that gets ticked, right? And then it's like, okay, well, all this stuff that's in here, if that gets ran, that's liquidity to take, right? So that's good. And then it's like, okay, well, how do we develop? Do we have something to target and to take into our POI to then start looking for order flow shift on the lower time frame, right? So this is just one box of many boxes that needs to get ticked. But I totally get your question, man. I would still be looking, even if we move correctively and with that our break at the low, it would still be something I would consider looking for a strong high, just depending on how the confirmations look, right?
Yeah, so I guess the question becomes for me then, like, when should I count a wick break as a order flow shift? Is there
Well,
any?
If you look at this, like, I mean, depending on what time frame you're on, it's not so much about like wick breaks. It's more of like, because a wick on a 15-minute might be different on a 10-minute. It might be different on a 5. It might be a full body closure. We don't have like this big V. Like we have the initial V-shaped recovery, but you can see the tapering in price, right? So order flow has shifted no matter what, because we've broken this, we've left from a relevant supply, we've swept liquidity, we've come down, we have levels of liquidity to take. If it realigns at an extreme refinement like this, that's going to show you that this low is essentially going to be weak. So like I said, it's more about the confirmations that happen afterwards.
That last bit makes a lot of sense. Yeah.
Yeah. You know what I'm saying? It's the delivery, right? Like price delivery is everything, right? So remember what I always say too, and you've been in a class with me for how long now? You know, POIs gain relevance by what?
What happens before them, leading into them?
That's right. Cool.
Cool. Yeah. Thank you.
You're welcome. Ty, can you look at the extreme of the last buy leg? Is there a clear setup for you? The last buy leg. Whereabouts am I looking here, Alex? Like zoom out?
Yes, can you go in 15 minutes, please?
15?
Yeah. Here there was an extreme on 1 minute, which also have
Okay.
level 20.
Let me just go out to the one. Got the extreme refinement right here, right?
Yeah.
Okay.
If you look directly on the second condition,
Yes, this is probably one that I would look for seconds, just because we're literally do or die. Remember I was talking about that. What was that, a couple of days ago now?
but then I have a question. Can you go on 5 seconds? Because I saw this. I mean, would you consider this as a chop? Because so many times we waited for this to break and never comes back.
Yeah, see, I wouldn't consider that a chop. Like this is where the change of character happens for me.
Yeah.
You know what I mean? So like until that breaks, it just means that there wasn't an entry here.
Yeah.
Yeah, like you may have been able to get super aggressive with like a buy stop above here. You know what I mean? But like again, like you're gonna have a pretty wide.
Was so big. I mean,
Yeah, and oftentimes, man, this is where, you know, all it boils down to is like we're not going to have a picture perfect setup for every move, right? And like it's tough. It's tough to kind of watch this thing go up. Like, but there was in the way that we trade, we don't have an entry here, unfortunately. That's just the way it is, man. But yeah, like you're on the right track. I would say that it's very, very difficult to get into this. I would say that now, if we did something along the lines of, let's just go over to the 15. You can see that like we're sitting directly at this structure point right now, right?
Yeah.
So we haven't broken above it. To me, the better option here, if you've missed this, is to just look for ourselves. Right? So it's tough because you will watch this kind of leave without you, but just know that the next trade is around the corner too, right? And it's sitting right, like ultimately structure is what's holding the market, right? Here to here. This is where we've broken. We have not closed above it. Yeah, we've had a very small wick, but yeah, let's go into the lower time frame and just have a look right now. See what this looks like.
Around 1 minute, I think there was another entry. Yeah.
On the 1 minute. Oh, okay. So yeah, you
Yeah,
had
this-
so
this
this
one,
would
would you consider this
that's a chalk and flip. That's exactly what it is, right?
entry, yeah?
Yeah. So you have your supply, right?
Yeah.
Supply. Okay. And then 1 minute chalk and flip. It's a big candle, right? So you'd probably have to get down onto just a better, yeah. So you can see a little bit better here. The 30-second, that probably would have been the candle, because now you can see a little bit more of the details, right? We've got liquidity to take, right? We get the initial drive, induce level, boom, tap into this, and yeah, this would have been the trade to kind of take.
One more question, Ty. Will
Mhm.
you said this before? You will not consider this as an inducement because it didn't do nothing relevant, no? I mean, if it does this and then comes back,
Yeah.
actually, this is the inducement, no?
That would be inducement. That's right. So this is just a level of liquidity to take is all it is. It's not necessarily inducement.
So either we have build-up mitigation or inducement. We not
Sorry?
necessarily have both, no?
Can you say?
Either we have like this build-up mitigation,
Yep.
or we have 11 to induce. We don't need to have both, no?
No, you just need some form of. So all we need is a form of liquidity to because in order for us, like once we clear out either this or both, whatever it might be, look at one level of liquidity to take into here, boom, away we go, right? It's always just one point of liquidity to take, and the reason why we do that is because it's so much easier to satisfy one side of the market to then be able to go in the ideal direction, right? But yeah, you don't necessarily, obviously, if you have more than one, it's just an added confluence, but ideally you only need one. Okay.
Thank you.
Thanks, man. I was getting married to the extreme, totally blind to that 1 minute chalk. Yeah, and like in the trade plan, because we're technically counter order flow, it actually says just a 1 minute chalk and flip, and then maybe you could have confirmed this on 5 second. I don't even know if it shows anything. Yeah, so you could have had like something like this. Once we chalked up, come back down, flip causes it, levels of liquidity to take, same thing. Cool, that's it, that's all. So yeah, that was my trade day today. Like I said, took one hit moving into the session, reasonable hit, and I think a lot of you guys ended up taking the same thing. Yeah, don't beat yourself up on stuff like that. And one of the other things I just want to mention, another member and myself were just briefly chatting about it, is how do you sort of like just push through and take the next trade, and obviously not worry about like taking a second loss or a third loss or whatever it is. The bottom line is the only way that you're going to be able to do it is by fucking doing it. There's no real better answer than that. The bottom line with all of this is if you see a setup that correlates with your plan, you need to take it. You got to click the button. You literally just need to, in order for you to fully embrace what it is that we do in this community and the way that we trade, with the very, very specific criteria that we trade, is every time that, because our criteria, it shows up most days, but it does not show up all days. And I think everybody can see that now, right? So when it does show up and you're sitting there and you're just kind of scratching your head and watching the entire thing happen without you, what that ends up doing is now you start looking for lower quality setups here. You start looking for lower quality setups here because you're going to chase. Naturally, when you miss the good setup, you're going to want to chase the market. And this is what we try to stay away from. We trade edges. We trade structural edges. We do not trade mid-range stuff. Okay, this is no good. It's nothing. This is all internal liquidity. We do not know what's going to happen in here. What we do know is that the edges of the market, the structural levels, are the highest probability areas, and that's why our entire plan is formulated around that. So, long story short, if you get taken out and you take one small hit here, so what? Not a big deal. Not the end of the world. Okay, move on. Look for the same confirmations that you would now see, because now if you look at this, we've only tapped into the POI. We have not swept the POI. when we sweep it and then show a V-shaped recovery immediately after with lower time frame levels of liquidity to take and more liquidity to target now, this is the higher probability setup, right? So do not stress out. Get aligned with order flow. Let order flow shift in your favorable direction. Once that happens, do not get scared to execute, okay? This is the only place that this is going to work, right? Otherwise, if we come up higher and come into the more extremity or the more extreme areas, we can then start to look for the same realignment. And all we've done all the while is build more liquidity for that move. You're getting in at a more premium price. It's going to be a lot easier to take partials and cover your losses a lot sooner based on the fact that everything has aligned at a higher price to be able to give you more RR. So you have to think in probabilities. You have to think in, if the setup is there, you need to take it. It's going to take a little bit of time. A lot of you guys are coming from communities where they didn't really teach, the very, very specifics of entries based off of liquidity concepts. I'm going to tell you right now, you are much better off taking the loss and learning that lesson while you're trading demo than second guessing yourself and then chasing trades. And all of a sudden you hit some of these chase trades, 2-3 times in a row. And all of a sudden you think that's a better trade plan, but you have nothing to measure it against. And yeah, it just breeds very, very toxic habits. So again, that's just my personal opinion. You guys do whatever the hell you want. At the end of the day, I do what I need to do to be able to trade and be able to trade full time. And this is an excellent system that's worked for me for quite some time now. So yeah, that's basically my thoughts on that. And I would limit yourself to a few, limit yourself to a few losses, not even a few losses. 3 trades per day is probably about the max. When you limit yourself to 3 trades per day, it allows you to focus on higher quality setups, trading around the edges of the market. Whether you take 2 winners, 1 loss, 3 winners, whatever the combination is, after 3 trades executed, that's more than enough to have gotten you in. That's basically a 33% strike rate. If you can't hit your 33% strike rate on the day, then you need to just kind of cut your losses. And that's basically the best way to explain it. Lucas, are your questions in relation to this specific trade? If not, I can, I'll message you personally.
Yeah, kind of. Sort of.
No worries. Let's do it.
Yeah, so could you go to the 5 second quickly, please? 2 of them are, 1 of them is not.
Okay.
So I took an out here as well, and I'm fine with that. But my question is more so I think 2 or 3 weeks ago, we went over about this, that when you have 1 minute or when you're waiting for the first chalk, you should basically be a little bit more conservative. So I'm not sure whether I made a mistake. I think I did, but looking back, would it be wrong to wait for this level to go before it would be a valid chalk, on the 5 second, I mean?
So like I was saying right here, you can see that order flow realigns for us, right? So this is not necessarily a valid trade because if you think about this on the 5 second, right? Here's your structure point here and here, right?
Mm-hmm.
So if we have an order flow shift back up into the POI, what do we need here?
Yeah, we need a 5 second order flow shift.
Realignment, right? And that's why,
Yeah.
so you can see, and it's very, very small, but it's still there. We get the order flow realignment, we can come back up, or you can play a sell stop underneath this low.
Yeah, I got it. And the second question I have is, because I was still considering this as a chalk here, and I said the flip caused it. So, and I took that second loss here, I'll be honest.
Okay.
Because the spread took me out from some reason. So was it wrong too in this case? Because we came to an extreme, I should have waited for the 5 second realignment here as well.
Well, and that's kind of what I'm saying is you should look for your realignment, just given the fact that we are technically leaving from a structural demand level, right?
Yeah. I mean, I guess I just didn't grasp that information because it was just so fast, but it is what it is. I will move forward and go
For sure. And what does it say in the flow chart model too, right? You play the flip and you play the extreme, right?
Yeah, yeah.
So you took an L here, you took an L here, and now you don't want to take the highest probability one. Is it what ends up happening, right? Because it's so easy to get lost on the 5 second. There's so many opportunities that present themselves. But yeah, man, you just have to understand that even if you took a hit here, even if you took a hit here, where's the highest, where's the last place it can hold? It's here, right?
Yeah. Yeah, to be honest, I did exactly what you said. Like, I just stepped away from the charts because I felt like I was forcing it and it was there.
Hmm.
Like, I'm glad I took them because I can learn from them, you know?
For sure. For sure. It's always a learning experience doing this. And the 5 second is, yeah, it's quick. It's snappy. There's a decision. Yeah. Decisions get made very quick.
Yeah. All right. Thank you, Tyson. I appreciate it.
No stress, man. Okay, guys, that's pretty well it. As long as there's no more questions, I'll leave you guys to it. And what we'll do is we'll regroup tomorrow morning and yeah, kind of go through the rest of the stuff later this week. No questions to close this out? Awesome. Okay, guys, peace out. Have a good rest of your day. Keep things simple. That's the bottom line here. Trade your plan. Your plan provides all kinds of opportunity. Do not be scared to trade it. How was the steak? It was fantastic. Thanks for asking. Have a good one, guys.